don't buy a house for the rate. You're going to probably not like the house. You need a person to be able to tell you all the information, but also to help you either pull the trigger or not. Like, you can do all the research on your investments and have all the information and all the knowledge in the world, but you still got to make a decision.
What are some common misconceptions people have about refinancing their mortgage?
I think when it comes to mortgages in general, whether it's refinancing, whether it's buying or just thinking about, a mortgage, a lot of people don't think that they can qualify.
Hi, my name's Corey Getz. I'm with UHQ Construction, and today we have a special guest. Currently there's a lot of homeowners that either have a lot of equity in their home. Mortgage rates are a big talk, and so I wanted to bring in an expert, somebody that deals with this on a daily basis and give us a little bit of insight on what's going on in people's largest investments and how they invest in them. So today, from Star Mortgage, I have Ean Decker. He's joining us today. He's a mortgage banker that works with them, and we're going to talk a little bit about people's homes.
Thank you for having me. Appreciate it.
Yeah.
Glad to be here.
Yeah, glad to have you.
Yes.
So just first, maybe start off and tell me, how did you get into real estate? How did you become a mortgage banker?
Well, prior to getting into this business, I was in finance, and but I really didn't like my job.
Yeah.
And so I was looking for something that would enable me to have more time with my family and not be so wrapped up 7 days a week, essentially, especially the weekends. I've got 3 kids and a wife. She works a lot as well. So I really was looking for something that offered great flexibility with work-life balance and things like that. And so I looked around, happened to know someone in the real estate industry, and she mentioned that she heard about potential job opening, and so I applied and just went all in with it, and got hired and never looked back since. So it was one of the better moves I've made in my career, and I'm happy that I did it. But it was motivated by liking finance, but not the particular level of finance that I was in. So I had to make a move to the mortgage industry, and I'm glad I did.
That's good.
Yeah,
that's great. And so what do you do now on like a day-to-day basis? What drives you to do your work?
Well, it starts with helping people, because this is a extremely important decision. It's one of the largest financial purchases that someone can make in their life. So they need someone to help them sift through all the complications and just the process, because it's a very complicated process. And so, helping people is where it starts. I like working with numbers as well, so it works for me. And just to see the joy in people's faces at closing when they, when they buy that house, or if they refinance or whatever it is they're doing, it's like it's a goal they have, and it's mission accomplished at the end of the day. So that really keeps me going each day.
Yeah, that's awesome.
Yeah,
that's great. Do you have any maybe notable success stories with clients or personal success stories you might want to share with us?
Most recently, this month actually, I talked to a woman who is fresh out of a divorce, and the ex is going their way, she's going her way, and she's got the house, but she needs to refinance it, and she's got some debts that she needed to take care of, because at the end of the month, she's like breaking even, right? She's barely getting by, and she makes decent money. So, just off the top of my head, she called me, asked me what I can do for her. And I essentially did all the calculations, ran the numbers. And I said, if you refinance, pay off your car, pay up a few other things, you're going to save about $1,100 per month. And that she was just like, sold, hook, line, and sinker right away.
Yeah.
And so we went through the process, and, we recently closed, and she's just like can breathe a little easier at the end of the month, because she'll have some extra money and get on with her new life. post divorce. And so that's, I do unfortunately talk to a fair number of people who are in that situation. But it's great to know that there is a way out for them, and there is a way for them to, go through a simple refinance and get some cash out of that to pay off some bills, which may be weighing them down each month. So, first one off the top of my head, because it just happened. So, but that's something that almost every month, I get to enjoy at least seeing the result of that.
Yeah, that's great. That's great.
Yeah.
That's awesome. Yeah, and makes a lot of sense to kind of get everything down to that lower interest rate and put it all into one package and save a bit of money, right?
Yeah, I mean, for her, she just had just the mortgage payment at the end of the month. No car payment, which was $750 a month, so we got rid of that. That was a big part of it. And then, some smaller little debts that, they add up. And so we got rid of all that, still able to refi, got her a good rate considering the market right now.
Yeah.
And at the end of the day, she's saving a decent amount of money and just in time for Christmas as well. So her and her kids can enjoy things a little better without having that worry on, January 1st, be like, oh, I got no money now because I paid my bills and my mortgage, but I'm broke. So it's nice to help people out in that regard and do it quite frequently.
Absolutely.
Yeah.
What are some common misconceptions people have about refinancing their mortgage?
I think when it comes to mortgages in general, whether it's refinancing, whether it's buying or just thinking about, a mortgage, a lot of people don't think that they can qualify. A lot of people don't think they have the credit score for it. Maybe they read something online or saw something on social media that maybe not have been totally accurate. And so that's why it's super important to speak to a mortgage banker like myself and to find out whether or not you can, and if you can, where are you with that purchase decision? Like how much can you purchase? What is your actual credit score? Because that's part of the process is, pulling the credit and finding out what it really is, and maybe eliminating some myths about qualifying. So I think a lot of people don't think that they can qualify just because of credit, income. They think maybe they don't make enough. They think, well, my parents didn't buy a house or never owned a home, so I don't think I can. And they just kind of like give up early on. So, I'm here to put those, myths to bed and let them know exactly what they can do.
Yeah. Because it's like Google. It's like you get on Google these days and it has this like AI generated answer for everything. And I feel like sometimes I get those too, and it's like half of it's wrong, or incorrect.
Absolutely. Or, a lot of social media, TikTok's great for the content it produces, but, unless it's a mortgage professional that's creating that video, it's kind of like, well, not everything fits everybody. Like if someone's on TikTok or any social media platform and they're talking about a loan program, they don't say that it's for just a specific person in a specific situation with a specific income or living situation or a state. It could be a non-Indiana state. And so that's what gets lost in that information is they're not telling all of it. They're probably speaking accurate information, but it only pertains to a small group of people. And so that's what you got to look out for. And that's why it's important to talk to a local mortgage professional like myself.
Yeah, absolutely. And I think credit scores, as you mentioned, are also like a tough thing because it's like, sometimes through the banking apps, they have like, here's what your credit score is, but then you actually go to like get a loan and it's like, well, they pulled another credit score from one of the other 3 institutions that keep track of credit scores. It's like, oh, well, I didn't know that's what my credit score was going to be for this situation.
Absolutely. And one thing that I tell everybody is I ask them what their Credit Karma score is or, their banking app. And I ask them, what does it say on there? Because it's going to be pretty close, but it's going to be different from when a bank pulls your credit. And the reason why is because the equation that those credit card companies or whatever banking app you use, the equation that they use to get your credit score is different from the long used since the 60s equation that banks use to produce your credit score. So there is a slight difference in how they determine that score based off of how much weight they're putting in your payment history, length of time you've had credit, a number of accounts that you have, your usage. So there's a whole lot of things that go into that. And these apps and things like that are great because people now have access to that information. And it's pretty good information, but it's still going to be different from what me at my bank or any mortgage company, because what we pull, no matter what company you go through, whether it's ABC Mortgage Company or Star Financial Bank, we're going to pull the same type of credit bureau pull, and it's going to pull up the same credit score versus an app that you use on your phone. But it's going to be close. So it's still good to have that information, and I tell people all the time, let me know what that says, because then it gives me a pretty good idea of where you're at.
Yeah.
If it says you're in the 500s, you're probably in the 500s with me. If it says you're in the 600s, low sixes, mid sixes, high sixes, then you're probably going to be somewhere around there. So at least I have a pretty good idea ahead of time as to where people are and what they're going to be. But yeah, you're right to that. There's so much information out there. That's why it's important to give me a call. I mean, it's really kind of a painless process to go through these days.
Absolutely. What are some common mistakes that people make when they're trying to get a mortgage?
As far as mistakes go, I think a lot of people listen to the wrong people, which leads them to probably not apply. So, I mean, that's a common mistake. So make the good decision or the correct decision and at least reach out to a mortgage professional. Not reaching out to someone like that, I think is one of the biggest mistakes you could make, because they're literally working for you. It's how we get paid, by closing that deal. So we want to see you get it done. We want to see every deal get done. Obviously, it's not going to happen, but we try to figure out how can we make this happen. So making the mistake of maybe listening to someone that's not in the industry, it may discourage somebody from applying or at least talking to somebody. And I would say that's probably the number one biggest mistake, is not at least getting the information from the right source.
Yeah, it's like, I was at Thanksgiving and my uncle said I wasn't going to qualify, so I gave up, right? Like,
well, yeah, with Thanksgiving coming up, it's you really got to, someone that bought a house 40 years ago, it's a way different ball game now. It's a different ball game from 2 years ago.
Yeah.
So things change in this industry all the time, and that's why it's important to speak to someone, even someone who's bought a house this year. Your situation's probably going to be different than what they went through. Even if you go with the same bank and the same loan officer, I mean, there going to be some similarities in the process, but no two deals are alike.
Gotcha.
Yeah.
Gotcha. Now, speaking of things changing, I know in the last, 4 years since COVID happened, a lot has changed. Home values in some situations we've seen go up 40%, sometimes more, sometimes less. What are your thoughts on that?
Well, I mean, it's the landscape that we live in now. And so, we are forced to adjust being in the mortgage business, and so are, your everyday buyer and your everyday seller. But there's a lot of good that can come from that. And that's, if people see their home values increase and they are a current homeowner, well, now they've automatically increased their equity in their home. And so it enables them to do some things a lot sooner than they ever thought they would have. Maybe some home projects, some renovations, maybe some fixes on the house, or maybe they just they're tired of their old kitchen and, they want to put a brand new one. I mean, it really depends what they want to do, but it at least enables them to do that. And that's what the increase in home values, have done for those who currently own homes. There's always two sides of the coin. So, on the flip side, it has made buyers have to kind of reset their level of buying. Maybe they're looking at homes in a certain price range, and then the value went up over the course of 3, 4, 5 months for those homes, and now they can no longer qualify for those homes. Well, they got to come back to me, and we got to take a look at things again and figure out, this is the new. Maybe we can raise their approval, but if not, then they've got to get with their realtor and find out, is this the kind of home that you're still trying to buy? A lot of good came of it because people increased their equity almost, over the course of a month, and then over the past several years, So I've seen greater than 40% increases in some markets. So it just depends where you're at. But and then on the flip side, it has presented some challenges for new buyers, and also for for the sellers as well. So, but it's the new landscape we're in, and the important thing is talking to a mortgage professional to find out what you can and can't do.
Yeah, absolutely. Yeah. And we know there's a lot of the homeowners that we work with, they have lived there for, maybe 5, 10, 20 years. And then it's like, yeah, we want to pull some of this equity out, but they've also got these like low interest rates from maybe refinancing when rates were sub 4%.
Yep.
I think I saw something recently, don't quote me on this. It's like somewhere between 60 and 70% of the population in Indiana have a mortgage rate below 4%. And so
that's incredible,
isn't it? And so it makes
I'm one of them.
Yeah. I think a lot of people, right? And so,
right.
So it makes people, we commonly talk to our homeowners and they're like, well, yeah, I don't necessarily want to refinance. I've got such a low rate. I'm waiting for it to get back down to 4%. I'm sometimes like, well,
may not happen.
Yeah, we'll see if that happens.
Sub 4 may not happen. And, that usually means something catastrophic's going on out there in the world. So we don't really want that to happen.
Yeah.
Kudos to everybody who's able to make that happen. To go with your point, people don't have to refinance their mortgage to get money out. They could do a home equity line of credit. They can do a home equity loan if they just want to take a bulk amount out and start paying it off right away. Yeah. So there's some options out there that we could provide if they don't want to get rid of their current first mortgage rate, which we totally understand.
Yeah.
But they still can have access to that money without doing a refinance and pulling cash out from the refinance. They could do a home equity loan or home equity line of credit type situation. So there are options.
Yeah. That's good for people to know. Now, as we tape this, existing home sales are at an all-time low this year. Why do you think that is?
In talking with a lot of my realtor friends and referral partners that I have, a lot of it has to do with those rates. A lot of people were able to take advantage of sub 4% rates and sometimes sub 3% rates. And it's hard for them to really want to sell a home because they're going to jump into a rate that's 2 or 3 times what they currently have. And so that's part of the reason. Giving up that rate's really hard. And it happened pretty recently. So they haven't really been able to enjoy it a whole lot, So I think that has a lot to do with that.
What is something we need to see more of in the mortgage industry?
Have more of or improve communication. That's between loan officers and buyers, agents and buyers. But outside of the communication and the methods of communication, I think right now picking up the phone and talking to people probably is the most commonly used method of communication. Text messaging is also great. So what we need to see more of is, I think, more accurate information and access to education for buyers or people who maybe want to tap into equity in their home. I think as we touched on earlier, there are a lot of myths and inaccurate things, ideas floating around there. So I think if there's more programs that mortgage companies or banks can put on, or maybe even, Fannie Mae themselves, to have people maybe create a page or a social media site to say, hey, this is your source for accurate information if you're interested in anything real estate related, whether it's buying a home, selling a home, being in the real estate business or whatever that is. So, I would like to see that because a lot of people, there's so much information being thrown at people, they don't know what to believe. They don't know really what's true and what's not. And a lot of it is partly true or even mostly true, but consider the source. So I like to see, and to go along with that, I like to see a little more, maybe, I hate this word is a touchy subject, but regulation on those who are delivering that information. I think we could all benefit from at least citing the source as an official one or not. I think that can help people really know if they should trust a source or not. So I think a lot of it has to do with that. But that's where I stand on that.
Yeah, because there's a lot of fake gurus out there, right? On like the TikTok and different social media platforms where like, here's your hacks, here's your tricks, right? And it's like, is that accurate? Is that a good idea? What state are you in, right?
Well, and they're also, they're speaking mortgage terms and terminology that a lot of people just may not completely understand, or they think they do, but they're not completely, understanding what they're talking about. And they're just talking like you and me, or it's a podcast or something, and they're talking about things, but and people may think they're talking to them and it pertains to their situation, and it may not. So again, it all points back to emailing, texting, picking up the phone and talking to, a local mortgage professional like myself.
Yeah,
I think that's where it starts.
Absolutely. What's something that we need to see less of in the mortgage industry?
Kind of just piggybacks with what we need to see more of. We need to see less of that inaccurate information out there. I don't think it's going to happen. Because we're in the content producing era. And everything is on video. So at least you can see the people that are talking about a subject. But I think if there's a way to produce less inaccurate information about certain programs or just the industry in general, that would be great. And this is something that may happen over time. A lot has to do with what I'm about to say here, but some of the underwriting standards and regulations and just industry regulations that we currently have, they're pretty tight. And what I mean by that is there's a lot more documentation that you need now, and the underwriting guidelines to approve a loan and close it, it's a little harder than it used to be, say, 10, 15, 20, especially 20 years ago, especially before the housing.
Prior to 2008.
And there needed to be change after that happened because of all the Wild West type things that were going on. And, with everything that happens is always an overreaction. And we're still kind of in that overreaction phase, I believe, but for good reason, absolutely. But maybe loosening some of the strings, I think could help, especially for buyers, because it's pretty tight for buyers, and it requires a lot on a mortgage company or bank to go outside of the industry guidelines that are set. It puts all the risk on them. So I would like to see less of I like to see the purse strings loosened a little bit, actually. So that would be nice.
A little less red tape. And
we put people through a lot, and it's really evident when I speak to someone who hasn't bought a home in forever, like before the housing crash in 08 and 09, and I'm asking them for what I think is pretty standard, not a whole lot of documents, and they're just like, what in the world's going on here? Like, you want my firstborn too? And so it's and I'm just like, I apologize, but this is what it is for every single person. I'm not singling you out. We just need your income docs, we need the application, and a few other things. And that's a lot compared to what it used to be. So I get it. I get why the industry standards are what they are and the guidelines are what they are. But it'd be nice to see maybe in the near future some of those loosened up just a little bit, so we can help more people buy homes who are qualified to buy homes.
Yeah.
And they really are. It's just there's some technical things that may be preventing them from buying a home, or a home that's 10 to 15,000 more that they really want. And so they got to kind of settle. And so I hate to see that. I hate hearing that word, I don't want you to settle on a home. I want you to buy the house you love,
Yeah.
or at least like.
Yeah, exactly. You don't have to just settle for well, this is the only house I can get.
Right. I mean, if you need a 4-bedroom home, the last thing you want to do is go for a 3-bedroom, because there's a reason why you need a 4-bedroom home. Yeah. If you got 3 kids, you need a 4-bedroom home, most likely.
Right.
A 3-bedroom home will do, but I'm the one interacting with them on a daily or weekly basis. And so I hear the frustrations all the way through the process. And so does the real estate agent as well. So, we all would like to see these things loosened up just a little bit at least.
Yeah, absolutely. That makes sense. What advice would you give to someone thinking about getting a mortgage or refinancing?
Again, talk to your mortgage professional first. People come to me with a lot of information, a lot more than they ever have, because of the access to information through multiple mediums like social media and just the internet in general. But still, first thing you got to do is talk to a mortgage professional, and maybe even speak to 2. It's kind of like getting a second opinion from a doctor. Now, if you bank with Star, a lot of people, they trust everything that Star does because they know Star, and so they may not need that second opinion or the second voice to hear about their situation. But it's at least worth it to speak to 1 or 2 people that are mortgage professionals, and go from there. I mean, that's about as simple as I can get with it. And then we'll figure out the details after that.
Yeah, absolutely. Absolutely. What advice would you have for somebody looking to become a mortgage banker?
Oh boy. Okay. Well, I think you have to ask yourself, number one, are you good at talking to strangers and getting in their business? Yeah. I mean, because we're going to be all in your business.
Asking them some questions. Right?
Yeah. If you're not comfortable talking to people in general, or you're pretty reserved and quiet, it may be difficult to get things started. You also have to have a sense of being able to help people, because that's what you're doing. I mean, at least for me, in my mind, I have to help these people because they have a need. Just like when I bought my house, I have what's now a need because I have a family, and we want and we need a house, and we want to stop renting and, for lack of a better term, throwing our money away. But it really starts with talking to people, wanting to help people, and if you've asked yourself that, and the answer to those questions are yes, then the next thing is, this is essentially like your own business, right? You have to be able to network, again, talk to people, talk to strangers. You have to meet real estate agents, so that way you can have a relationship and work with each other. And you treat it like it's your own business, because you have to get your own leads mostly, and you have to be able to, make people like you enough to send you their income information and their taxes. And when you're at the closing table and you're sitting next to them, you don't want to have that feeling of, man, this was rocky. They don't like me because I wasn't very good at talking to them, or I'm not very personable. I mean, I think generally being likable helps. Being able to talk to people helps, and explaining things clearly, and being detail oriented. A lot of qualities that any successful business owner would have. And if you're interested in getting in that industry, those are some qualities I feel like you would have. And then if you check those boxes and you think, yeah, I've got all this stuff, then go talk to a mortgage professional, a mortgage broker. Maybe you know someone, a friend of a friend, a family member, and they can be pretty real with you because they may know you and they may say, this ain't for you, or yeah, I think you would be great. You know, and I mean, I always am thinking about 2 or 3 people. My brother, I think would be awesome in this industry, but he's not in the industry. And I've got a few friends who are doing something else. And I just think, man, I think they would do great in this industry. So we as mortgage professionals, we've been in the business long enough. I think you can kind of sniff out other people who probably would do well because you know what it takes. Right. And I've been doing this for a while now, and I've had to talk to real estate agents, whether it's the first time meeting them and just doing your standard networking, but going above and beyond to earn their business. I think it's really important to go through that experience. And so talk to a mortgage professional. I think after you've done a self-evaluation on some of the qualities you'd have to have, I think that's the next best thing you can do if you want to get in this business.
That's great advice. Yeah, I think one thing I keep hearing repeatedly also, and people are looking for jobs, is like do a DISC assessment, some type of personality assessment. Like figure out, like, if you're not aware enough of yourself, like just go take like a DISC assessment or a personality assessment, and it can tell you like, well, here's what you're good at. Does that line up with this profession, right? Like,
that's a great advice, and that's something that when you apply, you have to do one of those with at least most mortgage, at least the ones I've been a part of. Yeah, you've had to do that personality test.
Yeah, and you passed.
And I passed. I was like, I don't know. I really don't know what they're looking for.
Yeah.
But I'm pretty personable, and I'm kind of a low key person. I'm not jumping around here hooting and hollering in this interview, but I am detailed, and I generally care and want people to, if they come to me and they want something to happen, I mean, it's my job. It's my goal and my job to see if we can make that happen and exhaust every single possible way before I'm telling them I'm sorry. And I hate saying that, but you have to be able to tell people no as well sometimes. Yeah. And you have to be able to piggyback that with, well, we can't maybe do something now, but here's a map, here's a plan for us to do this in the future. And that's very, very important with any business. If you're a business owner or if you're working for a business, like, you're going to have to tell people no more than you will yes, most likely. But you're going to have to give them a way out, a way to make this happen. And I think that's very important as well.
Yeah, that's great. That's very helpful. What's your message to the audience here today? Any specific message you may have for everybody?
All right. So my message to the audience, I would say, at least consider looking into home ownership. I mean, it is the one asset that performs every single time. It's an appreciating asset. And especially recently with home values going up to 40%, in normal years, it's going to increase 3 to 5%. That's the normal inflation. That's also the home increase in home values. And so, for instance, just quick numbers, if you buy a house, let's say it's $300,000, or you want to buy a house $300,000 today, even at 3% increase in home value today, next year, it's going to be $309,000. And so, consider buying a house, and consider buying it, like, see what you can do today. Because if you wait a year, it might cost you $9,000 more dollars, so, or more. And that's pretty typical. It's not like an exception to, I'm not giving you like an example that's like rare.
Yeah.
So I would say, look into home ownership, talk to a mortgage professional, see what you can do. Just because you apply doesn't mean you have to buy anything. I've had people that have been pre-approved for well over a year. You just got to renew it every 4 months. So it's worth seeing where you're at now, and then talking to a mortgage professional, because if you're renting, there's a saying in this industry that goes, divorce the rent, marry the house, date the rate, literally, because don't buy a house for the rate. You're going to probably not like the house. You know, like if you buy anything, if you buy a car just because you got a good interest rate, well, do you like the car? Is it big enough for you and your family? Like, it may have been a great rate, but you might hate the car. So same thing with the house. Like, we say date the rate because the rates change. They go up and they go down 5 days a week, you know, all throughout the year. And there's a history of rate cycles. They go up, they go down. Right now, we're in kind of a high rate cycle. A lot of people are saying that they're going to go down next year. I mean, it's just an example of the history of interest rates when it comes to mortgages. They go up and they go down. So, you know, that's my advice on that particular topic.
Yeah, I think that's great. Yeah, I think you're 100% right, because it's like people ask us all the time, you know, as a contractor, like, Corey, who's your biggest competition? And we always tell people, like, our biggest competition is time. The longer you wait, because with our building materials, they're not commodities, so they don't fluctuate with the stock market. Yeah, you know, so when every year the shingles go up, you know, 3 to 6%. The siding goes up 3 to 6%. The windows go up 3 to 6%, and every year it just compounds on top of it. And so it's like, the sooner you can get your project started, the better. And I think it's the same thing with home ownership, right? It's like the sooner you can at least get in there, even if the rates are a little higher right now, because I think there's a lot of older people that I've talked to, and they said, you know, when I first bought my first house, the rate was 12%,
18%. Yeah, I hear that all the time.
Yeah, and they're like, you know,
good old 80s.
Like, yeah, it's like 6.25%, 6.5% isn't all that bad compared to 12 or 18%.
Now they're thinking you guys got it good.
Yeah, and then on top of that, with the home value is just going to keep rising. So like, at what point is there that breaking point of like, I purchased it at this, and now I'm taking it down and
absolutely
in what I owe on it. So yeah, I think that's great advice.
Yeah, when we're talking about an industry that is tied to the market, so it's inflation is going to happen. Yeah. And you know, another way to say that is increases in home values are going to happen.
Yeah.
And that's partially due to inflation. I mean, it's all tied together. Same with building materials and the cost of things. And that goes for everyday things like food, you know, actual commodities, or non-commodity type items. So yeah, that's why it's important to at least consider that. Homeownership may not be for everybody right now, but you know, if you have a job and credit, you could potentially buy a home. And so, I mean, my message is at least inquire about that. You know, call up someone like myself, and we're going to keep it real with you, because we're not going to waste anyone's time, because it takes time away from us, from people, the deals we're currently working on and things like that. So, you know, if we feel like you could buy a home, then we will tell you, hey, you can buy a home now, or you might have to wait 6 months. And here's the plan, and here's a map to get there. You know, are you willing to let me show you a way? And I think that's important. So my message, I think, is to at least consider, you know, stopping rent and paying someone else's mortgage, and pay your own mortgage. And you can build wealth, and it's an asset, it's property you can pass down to the next generation, to your kids, and et cetera, et cetera. So it's extremely important to at least consider that and talk to someone. And if it's not for you, it's not for you. But I would say the majority of people, they really want to buy a home. Yeah. And I mean, it's a great thing to buy.
For a long time, that was the American dream, right? Buy a house, you know, start your family,
get your dog.
Yeah, get your dog. Recently, I hear inflation a lot lately. And another term that's very similar is appreciation. And recently I was like, well, what's the difference between appreciation and inflation? And I looked up the difference, and appreciation happens with an asset. Where, you know, if you own a home and the value is going up on your home, you own it, that's appreciation in your asset. And then, you know, inflation, which is happening, which is the rise of prices, is more of like a commodity-based thing, right? So it's like, you know, by getting into a home, it's like you can appreciate your investment in your investment versus, things are going to go up in prices, but it's like, how do you want it to affect you? Do you want to just be paying more, or do you want to be,
It's one of the more sure investments one can make. There's many ways you can invest, and a lot of things you invest in are intangible. This is a tangible investment, and you're living in it. So you can improve it as much or as little as you want, and it's also one of the biggest financial purchases that one could make. At least most people, it's going to be. Yeah. So it's extremely important to at least consider that, because it's something that has value and it will increase in value, typically year over year.
Yeah, absolutely. Especially right now when there's a shortage of homes in our state. I was talking with the realtor the other day, and it's like, when you look at it by decade, homes being built, new construction homes, it averaged around 25 million for 3 or 4 decades. And then after the housing crash, it went down to 5 million. So it was 20% of what it was for many decades. So, until we fix that shortage issue.
Yeah. A lot of building materials inflation.
Yeah.
So that, and I know that was a common cause of that, and you're heavily involved in that. So that's something you can really speak on.
What are the 5 main things you need to have to ensure success when either getting a mortgage or refinancing or getting a home equity line of credit, something of the nature?
It starts with how you make money, like your income. You need some sort of income to be able to support what you're trying to do. You need to have taxes that are up to date and current. So there's 2 like
Uncle Sam wants his money.
Yeah, or if you owe money, you've got to have that taken care of, or a payment plan started. So it really depends how that looks, but there are some things that we have to check and clear first, and it's the reason why we have an application. You have to have a qualifying credit score as well, and then on the credit report, you've got to have things that would disqualify you. You got to have those clear, like a recent bankruptcy, liens. You can't have any of those on there. So there's 4 things that are really tied to your financial situation, whether it's income or taxes. If you have a job, got to have enough job history. So a lot of these things are there's like 5 main things on an application that we need to be able to move forward with an application. And those are the 5 main things. Kind of expanding on that. If you're wanting to refinance, well, obviously you got to have a property to refinance and discuss new numbers with. So I've given you 5 things plus the property if you want to do refinance, but it largely ties around on the application what we are looking for, and we're looking for specific things that would qualify you, so that way you can move forward and have an approval, which would equal a successful application.
Yeah, absolutely. That's great. What are some, I know there's a lot of regulation in being a mortgage banker, but what are some common red flags somebody could look for when they're dealing with a mortgage banker? And, kind of like you said, sometimes it's advised to, talk to a couple, what's something somebody could look for and go, ooh, that's a red flag. I don't know if that's a good fit for me.
Someone that wants to promise you a rate before you even apply, red flag, 100%. You can't, because we have to know what your credit score is. We have to know your income situation. We have to make sure your taxes are good before we can even look at what the rates might be. And we don't even know if you're going to qualify for this program or that program or whatever. So if they're promising you a rate, that means they're promising you a specific loan program as well. And it just can't be done before you apply. If, a company's contacting you and says, hey, we can get you a 3.5% rate right now. Well, first of all, think about it. Does that seem like real?
Yeah, too good to be true.
In today's, it's too good to be true. Another thing, and this doesn't really happen a whole lot, but 2 months ago, I ran across someone who did it, and it's they talked to a mortgage broker, so someone who was independently brokering mortgage deals, and they collected a fee up front before, like with the application. So if someone's asking you for money up front before you've even know what you're going to do, that's a red flag as well. Like there's very specific rules against that. We as mortgage brokers or bankers cannot, collect money up front, especially payable to me. If I'm saying, hey, write Ean Decker a check for $500, probably shouldn't be doing that.
Yeah.
And it should be a huge red flag for the client. Like, don't write me a check for $500. And if I say, hey, I'm not going to work with you unless you do that, walk away, call me, call Starbank.
Yeah.
So
that's like asking the realtor to, paying the realtor their commission before you list your house for sale.
Right. Or even a part of it. Yeah. Like, no, that's not how it works. I mean, it's all handled at closing.
Yeah.
And I would say the third thing that's a red flag that people really should look out for is if that loan officer doesn't disclose, or when you apply, you don't see their license number with NMLS. That's very important, because that lets you know as a buyer and as a prospective client, that lets you know that this person is not only licensed, but their license is active and current. And it'll just be all kinds of stuff to deal with later on. If you start that process and you try to buy a home and this person isn't licensed or current, then there's going to be a lot of issues with your financing. So, that's something that's when I send someone an application, you see my picture, you see my contact info, and then you see my NMLS number as you're applying there. So that's very, very important. It's on my email signatures when I email people as well. So that's just something that gives them peace of mind. But a lot of people don't really think about that. They think I'm calling this guy because so-and-so told me to call him or whatever, but you don't know if they're still active in doing this sort of thing. And usually people who don't have their license updated, those are the ones that are going to ask you for a fee up front. And you don't hear from them again. So, so 3 red flags, I think, that are important to consider. Outside of that, the industry is pretty protected. A lot of the rules and regulations that I was kind of like sounding off about earlier, I mean, they really are meant to protect the consumer, the person that's going to try to buy a home or refi. I mean, a lot of those things were put in place because of what happened during the housing crash, and to try to ensure that it doesn't happen again. And so, it's great that they're in place, and things like this are additional things to look out for.
Yeah, those are all great things to know. So, we obviously do construction. We help a lot of homeowners, and sometimes they get these projects that are, they don't, maybe didn't realize how much it was going to cost. And it's a little more than maybe they've saved up in the bank, or maybe a lot more in some situations. And so they, sometimes they want to pull equity out of their home because their home value's increased. What are some options that people have when considering home improvement projects to be able to pull equity out of their homes?
Sure. Well, you have your standard cash out refinance. I mean, that's a way to refinance your current mortgage from whoever it's with and the rate to something new, and then using however much equity you have up to a certain point, and you have access to that equity to pull out. So that's a cash out refinance. So that's one option. If you don't want to refinance your rate, you can get out a second mortgage, which is the same thing as saying a home equity line of credit. That's going to save your current rate and the balance on that mortgage, and you're still going to make your normal payments to that mortgage company. But what you're doing now is, if you call me and say, I want to get a home equity line of credit because I want to pull some money out, I know I have some equity, I want to pull some money out for a renovation project or whatever it may be, that's going to be a separate loan that we call a second mortgage with a separate interest rate that you're going to make separately to Star Financial Bank. So that's another option you have And there's a lot of details with that. Won't get into those now. So call me if you have questions about that. And something that's very similar to a home equity line of credit, which is essentially exactly what it says, is it is a credit line that you're opening up. Another option is to do a home equity loan. And so in that essentially just says, I know I need, let's say 50 grand from my equity. I'm going to pull that out, and then I'm going to use that for something specific usually. And then I'm going to start paying that down as a normal loan, principal plus interest, making payments on a amortized schedule. So that's another option as well that I don't think a lot of people realize. They know about lines of credit, but they don't really know that there's also an option to use equity, but just create a loan. Like, you don't need it for future projects. You don't need to keep the line of credit open. So that way in 2 years, if you want to, use it for whatever, another home project, this loan, home equity loan, is essentially just saying, I know what I need. I'm going to purchase whatever it is now or pay the contractors now, and then I'm going to start paying it down right away. Yeah. So that's another option to have. We also have a home renovation loan product. And so that's something where it's specifically tied to a home renovation project. I recently had one where someone wanted to redo the garage and essentially adding another place to park their car, a whole new section to their garage. So they did a home renovation loan. And
is that something where maybe they have less equity and they're trying to add some value to the home then,
yeah. So what we'll do is we'll calculate how much value that'll add. So there's a whole process to that, but that is maybe it's more of a niche type situation that people will get in, as opposed to a home equity line of credit where it's kind of open and we're not looking at the future value of post construction or post renovation. So that's another option that people could choose to go with as well. So that's, it's nice because it tailors to what people are looking to do specifically, versus just having one option that may kind of fit what they're needing, but not really. So that's why it's created. It's created to tailor to people's specific needs, whereas the home equity line of credit may be for people who want to do some things. They don't need to do them now, but they know they want to do them and they have the equity. And with the home equity line of credit, you can open it up and you don't have to use it right away. So if you have zero balance on that line of credit, you're going to have, zero payment. Yeah. So, but it's flexible.
Yeah. And if you're not sure which one you need, reach out to Ian.
Absolutely.
He can help point you in the right direction of which one is going to fit your situation best. Right?
Yep. Yeah. I'll guide you. Someone thought they wanted a home renovation loan recently. We ran the numbers, made a lot more sense to do a home equity line of credit. People may think they may be fixated on, I know I need this. I've done my research. And then they find out, well, actually, it's going to be more expensive to do it this way or whatever. So definitely reach out to me.
Yeah, Ian can save you some money possibly. So speaking of that, reaching out to you. So what does that process look like if somebody's like, hey, I do want to consider using some of this equity in my home to do some home improvement projects? What does that process look like, from as far as from initially reaching out to you to, closing on that loan or mortgage?
It's set up kind of like for each for any product you want. So it's set up kind of similar. So you have an application, you reach out to me, I send you the application, you complete it, send me your loan docs. We need whatever we need to support the loan. You get your appraisal, we go through the process, and then we set up closing. That's putting it very general, but each process is very similar, whether you're buying a home, whether you're getting something for a renovation project or a home equity line of credit. There's a lot of similarities. We get the application, we pull credit, we collect your documentation that we need. Once we get all that, we go to the next step, and that's the processing part of it, where we order the appraisal, we see what the value is, so we can calculate how much equity you have exactly, and then how much you want to take out, and then we can calculate and figure out what your payment's going to be and what all the numbers look like, and then after that, it's talking about closing date and kind of getting some of the final documents if we need something like that, and dotting our I's and crossing our T's and working our way to closing. So it's pretty similar for each process, and the timing, we like to say within about 30 days. So it's pretty quick. It could be done quicker. Just depends, how complicated your situation may or may not be, and how quickly you get documents and things like that. But generally, when I get an application, I can review the application, pull credit, and get a good idea of what someone can do within 24 hours.
Yeah.
And then they send me all the documents that same day, then I can have a pre-approval within that same 24 hours.
Yeah. So it sounds not like a super complicated process, but something you'd want, a professional, somebody to help you through, and it sounds like you could definitely lead them through that.
Yeah, absolutely. I mean, it's something that is definitely needed, because I will guide you onto the right product. I will guide you and inform you of your cost and what the expenses may be. That way you can make an informed decision as someone who's trying to do purchase or a home equity line of credit or renovation. Like you need to know what you're going to be paying up front, so you know what to expect, and that's part of my job.
Yeah, it's very helpful. Very helpful. So the very beginning, I think you talk about the application. Is it just as simple as them reaching out to you over the phone and getting in touch with you, and then you can get them started from there?
Well, I mean, before I send them anything, I like to do what's called an initial interview. And there's some specific questions that I ask. And if we're over the phone or whether we're in person, I have a sheet and I have my questions. They're the same questions for everybody, but it allows me to see where these people are at and if they even should apply. Because like I said, I don't want to waste people's time.
Yeah.
Because that's not fair to them. And I'm not being fair to myself, because then I would be wasting my time submitting an application when I know they can't even do anything.
Yeah.
So there's an initial interview process. I'm going to ask them some questions about their job, their income, if they know their credit history. Maybe they'll show me their Credit Karma score. Yeah. It gives me an idea of where they're at. And if the Credit Karma is showing up to 480, then we're going to probably not move forward, but we're going to figure out a way that they can get that score up and as quickly as possible. That's what it starts with, the initial interview with the potential client. And then that potential client becomes an actual client by me sending them the application and then filling it out.
Yeah, because I think a lot of people, I know for me at least, it's like whenever I look at getting some type of loan, it's like, I don't want them to pull my credit score yet. I want to know, like, do I generally qualify,
right,
for whatever it is? Especially when I was younger, I think it was, a little tougher, more worried about getting loans. Now I think as I've gotten older, I'm like, yeah, no big deal. They're going to approve me. They always do. But yeah, I think that's always one of people's biggest worry is like, are you instantly going to pull my credit? Right. And it sounds like, you've got a set process to be able to help people understand, like, generally where do they stand before you'd even pull the credit.
Yeah. And they may have a host of questions for me, and they may be interviewing me as well. And so, and I understand that. I totally understand that. I look back at my first home buying process I went through with my first home. I was 25, so I didn't know anything really about buying a home. I had a good loan officer though. He explained things really well. And I look back at it now and I'm like, if I would have known better, if I knew what I know now back when I was 25, I would have done certain things, but it worked out. But I definitely reflect back on that experience and think, a lot of these people, I've talked to people who are really smart people, doctors, lawyers, whatever it may be, that don't really know the mortgage process. That's not their business. That's not what they went to school for. So I can't assume that everybody knows when I start talking about ARMs and, all these different things that they're going to know what I'm talking about, because typically they don't. And so I want to make sure I'm speaking the language that they can understand, and then, educating them enough to let them know that, yeah, you're making a good decision or not, or we need to wait, or we can or we can't. So I like to reflect back on some of my personal experiences as the client and try to remember that each time. That way I'm not just taking advantage of my knowledge and assuming that they know exactly what I'm talking about. But that's the important part of the interview.
Yeah. And all the more reason for people to reach out to either you or a mortgage professional and figure it out before you worry about it. I think, one of these common trends now is that people go online to get a mortgage. And I see this with insurance too. And it's like, we deal with a lot of homeowners that have bought their insurance policies online now, and then they file an insurance claim. It turns out their coverage is like awful, and I'm no mortgage professional, but I can only imagine, similar things could be happening if people are buying a mortgage online without ever talking to anybody, right?
Absolutely. There's a lot of internet, we call them like internet lenders out there who throw a lot of stuff out there online, on social media, and hope that some of it sticks. But you're typically not going to speak to somebody. You're definitely not going to meet him in person, but it's probably going to be all email type communication. You may speak to a live person, but for me, I don't like buying something such as a home, which is probably the largest purchase I'm ever going to make, and not at least speak to someone who can explain to me specific questions. I'm the type that likes to read terms and conditions on everything I get, because I want to know, what if XYZ happens? Am I going to be left out in the cold? And a lot of the terms and conditions that are created are meant to protect that company and not necessarily the customer or the client. So that's extremely important.
Yeah, and sometimes I can only imagine sometimes those, they say, oh, well, the rate's lower or the fees are lower. It's like, well, everything I've ever done in life, I always get what I pay for.
Exactly.
And I can only imagine it's got to be the same exactly with dealing with a mortgage.
Exactly. Or if they advertise a super low rate and they actually can do it, probably going to offset that with super high fees to close. So there's a lot of things that, you can bring me whatever offer you have, and I'll let you know if this is legit or not. I'm all for at least being upfront with people. If they've already done the time and they've already spoke to a loan officer and they've got a pre-approval letter or pre-qualification letter, I'm gonna let them know this is worth nothing, or it's worth something, but at least let me try to earn your business.
Yeah.
But yeah, reach out to me. Absolutely. Let me know if I can help you out. And sometimes I can't, and that's fine. But at least you'll have a second opinion.
Yeah. That's great. Well, I think the underlying message today is, if you're not sure, or even if you think you are sure, go talk to a mortgage professional. Talk to Ian or somebody in his shoes, and take the time to make sure before you make your largest investment or a decision on your largest investment that you're hopefully doing the best thing you can.
It's 100% worth it. You don't want to have a regret on a house you bought or the financing terms that you signed off for. And it's true. Probably 9 out of 10 people do not read the fine print. Even something like this, they're excited. They get disclosure sent to them to sign. Ooh, they sign it real fast. So yeah, definitely take the time to at least let me read those for you.
Yeah.
And decipher those for you. So, because I speak mortgage, so to speak, a lot. And if you're not in this industry, I don't expect you to as well. Yeah. So lean on me for that. That's all I can ask for is lean on me. Let me show you what's happening, and let me show you a better way, possibly.
Yeah. I think it's like a lot of people have like their money guy, right? Like, I got my investment guy, right? Because to be a good investor, you'd have to spend tons of time analyzing what's going on in the market, or, the right strategies, and being educated on it. And I think your situation is the same thing, where it's like, you kind of want a mortgage guy, right? Like, you want somebody that has done this for a long time, is aware of what's going on in the market, because it's constantly changing now.
Constantly.
If not more than ever, but it's just changing constantly. So,
and you make the perfect point. Like, you need a person to be able to tell you all the information, but also to help you either pull the trigger or not. Like, you can do all the research on your investments and have all the information and all the knowledge in the world, but you still got to make a decision on what to do. Am I going to invest in this, and how much and for how long? That's where, it's kind of similar with mortgages. Like, well, should I go with this program? Because I've got 3 good options. Which one's the best? Right. It could be that. I mean, it's not always just, there's only one option for you. There could be multiple ways to get a mortgage, but is this the better way? Is this the best way for me for what I'm trying to do? I mean, it just depends. I mean, are you trying to move in 3 years? If so, then you probably shouldn't be doing this, and this, which makes this deal great, but it doesn't really fit what you're trying to do.
Yeah, long
goals. Yeah, long and short term. Yeah.
Yeah. Well, Ian, I appreciate you taking some time to educate us a little bit on the mortgage process, about, mortgages in general and what people need to be looking out for or watching out for. And so I appreciate you taking the time to come in today.
Absolutely. Thank you for having me. Appreciate it.
Yeah. We'll talk soon.
Yes, sir.